and I'm a senior mortgage advisor here at Dreyer Group Mortgages. And I'm going to be presenting the information to you this afternoon with respects to owning versus renting a strata property. If you have any questions throughout the presentation, please feel free to write them down or type them in the question area on your screen, and I'll be happy to answer any of them once the presentation is complete. So let's get right into it. So we're going to go over several topics today. Of course, number one being the differences between owning and renting a strata property and the pros and cons of both. I'm going to show you some numbers, what it looks like to own a strata property versus renting, what you need to do to get approved, and I'm going to also outline what the mortgage approval process looks like. Furthermore, we're going to look at the down payment and what you can use for a down payment, as well as co-signers. So who can co-sign and when would a co-signer be needed? Also going to show you a quick financing scenario. So just to show you some numbers and some examples to demonstrate what homeownership might look like from a bird's eye view. And of course, a really important point, which is the costs associated with buying a home. You know, the general costs many of us are aware of, but there's also lots of little ones that do end up adding at the end of the day. So just want to outline those for you as well. And finally, we'll go over a couple of programs that are available to first-time home buyers. And of course, just finishing off with the benefits of owning a strata property. So there are some positives, of course, with owning a strata property, and I would say the most significant one today, especially in this crazy real estate market, is that condos and townhomes, which are strata properties, tend to be more affordable today than single-family homes or detached homes. So one of the reasons for that is you are sharing the property together. So you are sharing the cost of the building and the maintenance, etc. It's also nice to know that there are typically increased security measures when you're living in a strata property. So you're living close to your neighbors, and typically speaking, you get to know them and the faces around there. And so, again, it's just nice to know that you know, you have some familiar faces, and if there's any sort of suspicious activity, it would most likely be reported quite quickly. A great aspect as well is the turnkey living lifestyle of living in a condo and a townhome. So what I mean by that is, since the maintenance is very low, since the security is high, you have neighbors that you're familiar with around you, it's quite easy to leave your home for vacation, let's say, or maybe you're a person that works very long hours and you're out with friends on the weekends and you don't spend a whole lot of time at home. Owning a condo or a townhome is certainly something to consider given the ease of, you know, locking up and walking in whenever you need to. It's also nice to know with strata properties that there's typically a strata council that helps to handle any disputes or issues ongoing within your property. So it could be really simple as some maintenance issues or, you know, appearance issues, right down to having any issues with your neighbor. So again, you have a governing body or the strata council that will help you to iron out all of those issues if and when they arise. And of course, I know I alluded on this a little bit earlier, but owning a strata property definitely affords for lower maintenance. So you're not going to be having to worry about spending your weekends gardening and mowing the lawn and pressure washing everything. You know, it is very turnkey. So you're responsible for for your home, the inside maintenance of your home, and the immediate surrounding area. But other than that, it's up to the strata and the people that they've hired to take care of the property for you. Another benefit would be access to amenities, and this is something that single-family homeowners don't have. So for example, your strata property that you're looking at might have a gym or a pool, or even a large meeting room or a pool room. So these are quite common when you're looking at strata properties, and as an owner, you would have access to such structures. And finally, one of the last advantages to purchasing within a strata property is the sense of community. And so again, you are living close with your neighbors, which might not always be good, but for the most part it is. And again, you get to know each other, and generally speaking, you do tend to look out for each other. And as I mentioned, if there's anything sort of suspicious happening, again, it's probably going to be reported quite quickly. Now, on the other side, if we want to look at perhaps some of the downsides of owning a strata property, one would be the restrictive nature of the property itself. So as an example, there might be a pet restriction, and this is very common. So the strata building might allow for one dog, let's say, or one dog or one cat or something like that. So again, it can be restrictive. So if you have a lot of pets, something to certainly speak about with your real estate agent. Some buildings are also age restricted. I know here in the White Rock area, it's very common to have buildings that are age 55 plus or 19 plus, something like that. So again, something to consider as well. When you do own a condo or a townhome, you don't have as much leeway when you are designing your home or trying to change the appearance. So you won't be able to paint the outside of your building or your unit whatsoever. I mean, right down to the blinds and the type of blinds that you install. It could be the type of blind or even the color. So, if your strata property has allotted for, let's say, a light blue color blind, you're not going to be allowed to install bright orange blinds. And so for some, that might be the downside of just having such control over the appearance of your own unit. Also, when you're paying strata fees, these are the fees that are used for common maintenance or to repair roofs and decks and things of that nature. If you're not on the strata council, you might feel that you have a little bit less power when it comes to the allocation of your money. So, most people are paying $200, $250 a month for strata fees. And again, if you're not on the council, you're basically going to have to leave it up to them to decide where your money is going. So how much is going to landscaping, how much is going to salting in the winter, things of that nature. Now, we've provided a little example here just to show you how affordable it could be to own a home versus renting a home. So as an example, condos in South Surrey, 2 bedrooms in particular, typically will rent for $750, $760 and up. So that would probably be on the lower end of the scale. And so if you were to purchase a condo for $300,000 with a standard 25-year amortization period in a fixed rate, the monthly mortgage payment alone would be about $1,370. And so once you add your strata fees and your monthly property transfer tax, property tax, the monthly cost would be about $1,632. So it would actually end up being a little bit less than you would renting. Now, the next step, once you understand how strata properties work and the pros and cons, is to understand how you might go about getting approved for buying a strata property. So first and foremost, you want to consider your employment. So as you can see here on the screen, employment and credit, these are probably the 2 most important factors that determine your eligibility for a mortgage approval. So it says here that the minimum employment must be about 3 years. Now, it's not entirely true. So you don't have to be working for the past 3 years. You might have just obtained your degree and you just started working a year ago or 2 years ago, and that's fine. But lenders will want a 3-year history as to what you have been doing, whether it's education related or work related. And there's a couple of ways that lenders will verify your employment. So it might seem very tedious, but there are good reasons for this. So example, it says here the lenders will confirm your job by way of an employment letter and a pay stub, and sometimes even notice of assessment. And on top of that, a lender will even call your employer to verify the information on your job letter and pay stub. So several years ago, you probably only needed to provide a pay stub and that was enough. But in today's lending world, fraud is actually increasing year over year. And so the government and lenders are just taking some extra precautions and extra measures, which actually end up protecting us all at the end of the day. And as I mentioned before, credit is also extremely important, if not more important than your employment status. And so it's really important that you are establishing credit, number one, but number two, establishing good credit. So what we mean by that is lenders will like to see that you have at least 2 trade facilities, such as 1 credit card and 1 line of credit, or even 2 credit cards, and that you're using them on a regular basis. And that reports credit activity and that you are able to manage your debt in an effective manner. So things like paying your cell phone late even, or credit cards, or missed mortgage payment, things like this would greatly affect your credit bureau history as well as the score. And one more thing I just want to touch on credit that's not on your screen is the importance of maintaining little to no debt load. So some of us might think that we have a $10,000 credit limit and that the balance is $9,000, but I make my minimum payment every month, so that's fine. And it is good in that you're not making any late payments. However, when you have high balances on your credit cards and bank loans and things like that, it actually does reduce your credit score. So the lower the balance and the higher the limit, generally speaking, the higher credit score you will earn. So once you go through the pre-approval process, which is going through the employment verification and the credit bureau, you're now ready to basically finalize the pre-approval application. So once that is all checked out, we would actually secure an interest rate for you for up to 120 days while you're taking the time to shop around with your realtor for a home. Now, once that is all in place, we're protecting you from a rising interest rate market. So now it's time to go house hunting with your realtor and work with them to negotiate an accepted offer. And once you have an accepted offer, this is when we come back into the picture and start actively shopping the mortgage market for the best offer at that time. So this is when we are working with our lending partners with the property information at hand. So we actually have your contract, and we'll review the strata minutes and everything, and we will be speaking with the best lenders who are offering the best terms of a mortgage for you. And so once the lender is satisfied with your employment and your credit and the strata property itself, at that time you would be eligible to remove your subjects on your financing offer. And finally, once that is all said and done, you will be signing with your lawyers, so your lawyer or your notary, and that is when your name gets registered on title as well as your mortgage. And after that, you are a homeowner. Now, the next part is to discuss the down payment. Now, this one can be a little bit tricky, so I'll try and keep it as simple as possible. But one important thing to know is that the minimum down payment requirement for a principal residence is 5%. So as an example, if you were to purchase a home for $500,000, the minimum down payment you would need would be about $25,000. Now, that is a program that is implemented by CMHC, which is a government program. It's not only for first-time home buyers, but it certainly is geared toward someone like a first-time home buyer or even a professional that's just starting their career and, of course, might not have had several years to save up a larger down payment. So the traditional down payment is 20%. And so if you're able to put down 20% of the purchase price, you would be able to avoid CMHC altogether. And so that way your mortgage does not have to be insured, and there would actually be no CMHC insurance premium, which I'll touch on a little bit later. So as a comparison, if you want to put down 5% on $500,000, again, the down payment is $25,000. Conversely, if you want to put down 20%, we would need a $100,000 down payment. Now, the down payment can come from several different sources. So number one, of course, is your own savings. So a down payment can come from your checking, your savings, GICs, investments, anything of that nature. As a first-time home buyer, you may also withdraw from your RSPs. And I'll also get into some more details on that a little bit later on. Gifted funds are also a possibility for a down payment, and it's actually a very common way of obtaining a down payment today, especially with the the value of homes being so high. So gifted funds might come from an immediate family member, such as mother, brother, father, sister. And finally, some are eligible for a borrowed down payment. So you might be able to borrow a down payment from family or even from your own credit card or things like that. This avenue is not the most common, but it is possible. And touching on that a little bit more, for the non-borrowed funds, is going back to the gifted funds. So again, it has to come from an immediate family member only, and this is confirmed with a gift letter. So the lender would actually send us a gift letter, which would be required to be signed by you and your family, and it basically states that the funds are not to be repaid. And on the other spectrum, when you're looking at a borrowed down payment, again, you can use your line of credit, credit cards, and you may even be able to borrow from a family member as long as there would be a contract in place outlining the terms of repayment. Now, this is a really common scenario as well today, which is adding a co-signer to your application. And I know we get lots of questions on this daily. So a co-signer is really great to have if your income does not quite substantiate the size of mortgage that you're looking for. So again, you might have just finished school and you're just starting your career, and though your income is on schedule to climb year over year, you know, having a co-signer is just going to allow you to get into the market a little bit quicker. A co-signer is also great if you have limited or bruised credit. So the person, typically it would be a family member, they would go onto the mortgage and on title with you. So they would share responsibility of the home and of course the debt. So if you were to default on a payment or on your loan altogether, your co-signer would then be responsible for fulfilling the debt obligation. So the advantages of having a co-signer, again, it's going to be a little bit easier to qualify in most cases. The lender would feel more comfortable because you are adding security to the loan, and as I mentioned, it does allow you to get your foot into the door quicker than otherwise. And the downside is that you might not want to share ownership with the co-signer. There could be legal issues in the future, you know, so if you don't necessarily get along with your family, it might not be the best idea to have one of them co-sign, but always something to consider because you are entering a legally binding agreement. And of course, you may remove the co-signer later on as long as you can qualify on your own, but just understand that there will be costs to removing the co-signer. Typically, it would be a few $100s. It just depends on exactly how it's being done. Now, these are the financing scenarios that I just wanted to show everyone, just to give you a brief overview of what homeownership looks like in the way of a monthly payment. And so let's just look at a conservative scenario on the left-hand side. If you look at a $300,000 purchase price, and let's assume to the right you had a minimum down payment of $15,000, and that would give you a mortgage of $285 plus your CMHC premium. So at the end of the day, your monthly payment on that would be about $1,717. So again, this is very close to what you'd be paying in rent, and most likely even less. Now, this is also really important when you are planning on buying a home, is asking yourself, what is this going to cost me? What are all the costs associated with buying a strata property? So first and foremost would be the property transfer tax. Now, if you are a first-time home buyer, you are exempt from property transfer tax up to a purchase of $475,000. If your name has been on title of a home anywhere in the world, you might not be eligible for the property transfer tax exemption. And so in that case, you'd have to pay 1% of the first $200,000 and 2% of the remainder. And if you're not quite sure, you're always welcome to ask a broker or even your lawyer or notary just to make sure that you are eligible for that, that benefit. Legal costs when you're buying a home is typically from $800 to $1,000. It just depends on the nature of the purchase and, of course, the lawyer or the notary that you do choose. Mortgage insurance, we did touch on this. So if you have less than 20% down, there is a mandatory CMHC premium, but this is added to the loan. So that's nice in that you don't have to come up with this money out of pocket or up front. It's just added onto the loan, and it will increase your payment by perhaps a couple of dollars per month. And then also you want to account for your property transfer tax, your ongoing property taxes. Something that is not on the slide that I also wanted to mention was the new GST exemption for new homes. So this was just implemented by the Liberals a few months ago, and basically it says that if you are a buyer, whether first time or not, you are eligible to be exempt from GST on new purchases. So brand new construction, brand new condos and townhouses, you are eligible for a 5% exemption, which can be quite substantial. So to put that into a number, again, let's say you're buying something for $500,000. Last year, the GST would have been $25,000. This year, it might actually be zero for you. So it can be a big savings. Continuing on with the cost of purchasing a property, I mentioned to you that legals were about $800 to $1,000. And the title insurance on this first point is typically included in that number, but it is a separate cost to consider. So title insurance is usually about $250, and this is required by all lenders and essentially is protecting you and the lender should somebody actually impersonate you and sell your home without you even knowing, and this is done with title fraud. Home inspection can be a big one as well. So for condos, you're usually looking at $400 to $500. And homes, it can go up to $800, even a little bit over that. It just depends on the size of the property. Appraisal may be required. Typically, if you have 20% more or down or more, I should say, there would be appraisal required, and it typically costs between $250 and $300 on your typical strata property. Moving costs are also something to consider. So, if you're moving on your own, it might be a couple $100s to rent a truck. But if you have to hire personnel, of course, you might be looking at $500, $600, $700, $800. So something to look into a little bit further. And of course, your typical utility hookups, cable, internet, phone, things like that will cost you, $100, maybe up to $200. And finally, fire and home insurance, which is mandatory. So generally speaking, when you're moving into a strata property, you have fire insurance, and so you just want to make sure that you actually have contents insurance, which might run you a few $100s per year. Now, I know I've touched on this a little bit already, but just to review one more time here, the Home Buyers Plan is specifically for first-time home buyers, and it's a government-implemented program. And this allows you to withdraw up to $25,000 from your RSPs per couple. And so you can use this for the purchase of your first home, and you have 15 years to repay the RSPs. There's a little bit more to this as well, but we'll save that for another presentation just to keep things fairly simple here. And again, the property transfer tax. So this is always a big advantage when you're a first-time home buyer. Again, if you buy up to $475,000, you may be exempt from the transfer tax. And there's a partial exemption between $475,000 and $500,000. Now, of course, we all want to know, what is the benefit of owning a home, saving up for a down payment and taking the responsibility of owning your very own home? And number one, I would say, is building equity. So you really are investing in yourself and investing in your future. So generally speaking, the value of homes do rise annually. Mind you, it's not very typical that they rise as fast as we've seen them lately, so it should be considered a long-term investment. But what you are doing is paying down your mortgage, watching the value of your property increase, and in turn building equity. It also allows you to budget on a regular basis. So when you are a renter, generally speaking, your landlord may increase your rent, or they can increase your rent year over year to keep up with inflation. And so if you're on a tight budget, of course, this can affect you and your budgeting, and it can create an uncomfortable situation. When you are buying a home, and let's say you enter into a 5-year fixed rate mortgage, you then know what your mortgage payment is going to be for the next 5 years. And so it creates a lot of added stability to that effect. Property value increases, we just touched on that. And again, there are a couple of tax breaks that you might be eligible for being a homeowner versus a renter, which again, we can provide some more information a little bit later on. And finally here, everyone, I just wanted to remind you of your alumni benefits. So with a partnership of Dreyer Group Mortgages, we are able to offer complimentary appraisals. So again, if they are required, they usually cost between $250 and $300. That would be covered for you. And you'd also receive a legal fee credit with our partnership. You are guaranteed 1% off bank posted rates. And of course, a large portion of the mortgage proceeds that we earn gets donated back to your alumni program, our alumni association, and that helps out with future programs, and that will also allow us to build our program and add some features and some more benefits moving forward. So everyone, that would complete our presentation on owning versus buying a strata property. And I would be very happy to answer any questions that you might have at this time. So feel free to ask away. So this is a really good question here. So does having a cosigner affect first-time homebuyer government incentives? And it can, yes. So generally speaking, the main one would be the property transfer tax exemption. So if you have a cosigner, so let's say you bought a home for $400,000, you are technically exempt from property transfer tax as a first-time homebuyer. But let's say your mom and your dad help by cosigning. Well, they're not first-time homebuyers. So to that respect, you would probably be required to pay a portion of the property transfer tax. So there's ways that a lawyer or notary can register the ownership of the property to help you with the property transfer tax payment. But yes, simply put, in this respect, the property transfer tax would not be fully exempt. Okay, so the next question here is about the GST exemption, the one I just mentioned where the Liberals implemented this benefit only a couple of months ago. So yes, the GST is exempt, not just for first-time home buyers, but all home buyers who are buying a new build, as long as it does not exceed a purchase of $750,000. So the next question here is, does this information apply if I were to move out of the province? And yes, it does. So a lot of the information that I've shared here today are federal rules and regulations implemented by the government and by lenders, which means that this is Canada-wide and not just BC. This is a great question as well. So will the lender look at you differently if you have less than a 3-year employment history? And no, they don't look at you differently, as long as the story makes sense, that's all. So, if you are applying for a mortgage and, you haven't worked at all and you're 30 years old and your down payment is being gifted, well, that might cause a little discomfort for the lender as an employee. Now, I also see another question here about being self-employed. This one is definitely more strict. So when you are self-employed, a lender will want to see that you have been earning income as a self-employed individual for at least the past 2 years. So that one is really important. I have another question here about amortization, which is something we didn't touch on. So the question is, can I still get a 30-year amortization, and what are the circumstances? And yes, you're absolutely eligible for a 30-year amortization. The rule around that is that you have to have a 20% down payment or more. So if you have less than 20%, the maximum amortization would then be 25 years. I have another GST question, which is about buying a 20-year-old condo worth about $250,000. Is it subject to GST? And the answer to that would be no. So GST right now is usually applicable on new builds only, so no existing construction. And it looks like I have one more question here, which is, are you allowed to have 2 owners for the same property? And absolutely, yes, you are. So, example, a husband and wife, let's say, or a boyfriend and girlfriend are eligible to purchase a property together, and they would be considered co-owners. Perfect. So that looks like we are wrapping up. I believe I've answered all of the questions outlined in our with respect to our presentation today. If you have any other questions that come up later, please don't hesitate to call our office. Again, my name is Tanner Coles, and you can call or email us anytime with any questions. A great email to use would be admin@dreyergroup.ca. And if you do email us, we'll also send you a complimentary home buyer's guide, which will explain a lot of what we've gone over here today. So again, thank you so much for your time, everyone, and we look forward to helping you in the future. Have a good afternoon.